Nobody starts trading to become a gambler. He came for the same reason everyone comes: freedom, skill, a craft you can master from one desk. Day 1. A fresh notebook, one chart, and the quiet certainty that he would be different. This is the story of why that certainty breaks and what actually replaces it. And at first, the market plays along. His first green trade takes minutes. No struggle, no doubt, just a click, and the number moves his way. Nothing is more dangerous than easy money on day 1, because it teaches exactly the wrong lesson, that this was skill. Because the market takes it back. Same chart, same clicks, same confidence, and now every trade lands red. He isn't doing anything differently. That is exactly the problem. He never knew why the first one worked, so he cannot know why these don't. So the mistakes begin. Mistake 1. The moment a trade shows green, he closes it before the market can change its mind. It feels like discipline. It is fear wearing discipline's clothes. And behind him, the move he was right about keeps going without him. Mistake 2 is the mirror image. When a trade goes red, he holds it. He argues with it. He props it up with hope, as if refusing to accept the move could reverse it. The chart already gave its answer. He just doesn't want to read it. Mistake 3 arrives angry. After a losing day, he doubles the size, not because the setup is better, but because he wants the money back from the same table that took it. Revenge feels like conviction from the inside. The chart can tell the difference, even when he can't. Mistake 4 is quieter. He starts searching. New time frames, new pairs, new indicators, 6 charts at once. If this one disagrees, maybe that one will approve. He isn't analyzing anymore. He is shopping for permission. And some chart, somewhere will always sell it to him. And then, one night, it's quiet. Screen's off. The notebook from day 1, still blank. This is where most stories end, and where the internet says he lacked discipline, or psychology, or luck. But look closer at the 4 mistakes. They were never 4 different problems. Every one of them was a reading problem. He exited early because he couldn't read what a healthy pullback looks like. He held losers because he couldn't read when a level had truly failed. He revenged and chart hopped because no chart ever told him anything. He had never learned its language. The market was never his opponent. It was a book he hadn't learned to read. So the turn is not a new indicator, and it is not a secret. It is the notebook finally opened. Levels marked before the trade, not after. Rules written where feelings used to decide. Structure first, where buying stepped in before, where selling waited. Drawn, named, and then simply observed. This is what the skill actually looks like. Not predicting, not reacting. Reading, watching price arrive at a level you marked in advance, and letting the chart answer the question you wrote down. Patience stops being a virtue you force. It becomes a method you follow. And on candles, reading looks like this. A level marked where demand once stepped in. Price returns to it. And instead of guessing, he watches. The level holds, the reaction builds, and for the first time, what happens on the screen was something he expected either way. That is the entire difference. That skill has parts, and they can be learned in order. What a real level is, and why most drawn zones fail. What a sweep is, and why wicks lie. How structure shifts, and how to see it before the crowd names it. Each of the 4 mistakes has a mechanical answer, and this series takes them one at a time. So remember how this story actually reads. The market didn't beat him. His reading did. Next episode, what a real level is, and why most of the zones traders draw were never levels at all. Subscribe so you don't miss it.